Welcome everybody to MFM Live. For those of you that have never participated in one, this is something that we started about basically, I think 2 months after COVID kicked off. So as you guys remember, this thing called COVID happened, and MFM, for those that have never heard of it, stands for Multifamily Masters. It's really meant to be a grassroots level kind of brand where everybody, across the country had different meetups, about 50 at the time, flying, all the same banners, same goals, same vision, and really, kind of building that camaraderie, building that ecosystem. And so once COVID happened, we ended up going virtual, and MFM Live essentially was where that came. What we ultimately ended up doing. And so we do this every month, same. I think it's the third Monday of every month, and really with the goal of bringing on good speakers, panels, topics, things people want to hear about, listen about. And so, I have two partners on this, Garrison and Powell. Both of them are actually out, not available today. So I ended up being the solo one here to host it. But, for those that don't know me, my name is Ferris Musa. I have a company called Disrupt Equity. We're a vertically integrated firm based in Houston, Texas. We have properties throughout Texas and Georgia, and we do have our own in-house management company that does first and third party management. And it's, a lot going on in our world. So, kind of rapidly growing and continuing to keep up that momentum. And since Garrison and Powell aren't on, I won't even let them introduce themselves so they're not here. So, but for those that are attending, I guess most of you probably already know what our topic is today, right? We're talking about asset management, and I think this is really a part of the business that is, I think, highly neglected, right? Because everyone really, new to the business really focuses on the buy side, right? What it takes to buy a deal. And yes, there's a lot that goes into buying a deal, but really once you close, I like to say that's whenever the easy part stops and the hard part starts, right? Because performing is an important piece, and obviously asset management is all about how do you manage the asset and perform. And so it's an area that, again, there's not a lot of classes on, there's not a lot of educators on it, and so most people don't really realize it. So we figured we'd do a panel on it and bring on some of our friends, people that have done asset management, that understand what it is, and really kind of have them speak about what it looks like. And I like to do Q&A, and so I'm going to go ahead and moderate and ask some questions. And for those that are listening, please ask questions in the comments. So I guess first thing, go ahead and just type where you're from, just so people can know. But if you have questions, topics, ask them, and I will moderate them kind of throughout the presentation. And so with that said, we have two awesome speakers and friends that are on, Gary and Sandra. Do you guys want to go ahead and introduce yourselves? Gary, you want to go first?
Sure. Thanks, Ferris, for having me. Gary Lipsky with Breakup Day Capital, based in Los Angeles, and we focus on two areas to invest only, Phoenix and Tucson. Within the last month, we closed on a $59 million deal, and we just sold the deal last week for a little over 3x to investors. Trevor's raising his hand. He was an investor in that one. So, yeah, hit a grand slam. You don't have too many 3X's, but I'll make a plaque and hang that on my wall, and pretty psyched about that. And wrote the Amazon best-selling book, Best in Class on Asset Management.
All right, thank you very much, Gary. And Sandra, you want to go ahead and introduce yourself as well?
Yeah, so my name is Sandy Beninade, and I've been in asset management, property management, construction for many years, going on 30 years. Handled about 7,000 units, 6 states. That company has since gone out. The owner has passed away. All the assets were sold, and so my husband and I started a company for due diligence and asset reporting. So we would go around and assist with due diligence reporting or asset analysis, going through if you need just a second set of eyes or somebody to poke some holes in your asset management or your property management if you think perhaps that they're not performing at their highest levels. And then most recently, I joined the team at Disrupt. So I am now a part of Disrupt doing their asset management.
All right, just an asset to Disrupt by doing asset management. And so with that said, I wanted to go ahead and really, I think the first question is really the elephant in the room for people. And so Gary, maybe you want to go first, which is ultimately, the question I have is, where does asset management stop and where does property management begin? Right, so let's just go ahead and I think that's the thing people really, from people I interact with, they just don't really get it, right? What is the difference? Who's doing what?
Yeah.
So Sandra, I'm going to ask you the same question. So, I'm going to put Gary on the spot and, give you a layup here.
Well, great question. So the asset manager manages manager, essentially. They're the ones that they punch in, they punch out, they manage the day-to-day of the property, but they're not an owner. What you, as a good asset manager does, creates ownership thinking within that on-site staff, with the regional manager, with the leasing agent, the property manager, the maintenance staff. If you can instill that thinking, that ownership thinking, that will pay huge dividends because they're going to go that extra mile. But getting back to that question of asset management, so you want to secret shop them. You want to make sure they're executing the business plan that you came up with during due diligence, and obviously you're able to pivot throughout the whole time, but you're managing them, and that's the that's what happens at the end of the day. You have to go through the financials on a monthly basis, and people make mistakes all the time. You see it on those financials, and they're like 150 pages at best, usually a lot longer, and you need to go through them and make sure all the expenses are for your property and not another property, because that has happened many times. And bookkeepers have multiple properties that they have to work for, and they work crazy hours. They're understaffed like every other department and company that you work with, and it's your job as an asset manager to make sure that everything that is charged to your property is actually for your property, and manage every single income line and expense line. And a lot of people don't go through the financials because they don't understand it. And certainly I am no expert going through those financials, particularly in the beginning, but you ask questions. It's okay to ask questions and figure it out along the way.
Got
That's
it.
my
So
long-winded answer.
before I hop into that, then I'll let Sandra, same question. All right, what is asset management? Where does it stop between asset management and property management?
So it's just what Gary said. So your property management handles the day-to-day operations of the property. And you hired your property manager team because you are entrusting them with the daily operations of the property. You, as the asset manager, you are overseeing that the property manager or the team that you hired is performing at the highest and the best levels. And you are just auditing. You are overseeing that what they are doing is doing best, and that if there's any improvements that can be made. And so between the property management and yourself, you are truly just an auditor. You are a manager. You are an overseer.
Okay. So then maybe the question, and if either of you could answer this, is ultimately, are you managing the staff or are you not managing the staff?
No.
Gary?
Yeah, agreed.
So then
you want to motivate them. You want to find ways to connect with them, but you're not managing them.
So then who are you working with typically, right? Who are you giving direction and guidance to?
Yeah, that regional manager is everything, because they're the ones that are going to hold your staff accountable, which I've found one regional manager that has like hit the box on all these different things. They've held their team accountable. They're a good project manager. They have creative vision. Usually there's like one thing or the other, but it's rare to find someone that can do all three. You don't necessarily need someone to do all three, but if you can find that, that's fantastic.
Yeah, and maybe I'll add to that, right? Ultimately, we just look at it as asset manager really represents the owner's business plan, right? Property manager is doing the day-to-day. And so as an asset manager, you want to respect the chain of command, right? Because ultimately that manager is being employed by that regional, is being employed by that management company, right? And, because we've had this happen in the past where asset managers sometimes try to kind of overstep the boundaries, and then it becomes confusing to staff, right? Who do they get direction from, right? Gary wants to paint the wall blue, but the regional says paint the wall green, and they ended up painting the wall blue-green. right? And it's a problem, right? And I guess no reason I said green. My wall's green here, actually. But really, that's kind of the thought process for people, right? So then maybe going through that same kind of thought process, right? You're working with the day-to-day, the regionals do the day-to-day, right? You're working with the regional. How often do you meet with, I'd say, how often should an asset manager visit the property? How often should you meet with a regional? And again, that goes for either of you.
Want to go first, Anna?
So
Or both of you.
for me, I like to visit properties quarterly, just to track unless there is something going on that needs more attention. So is the property in heavy renovation? Is it in heavy CapEx? Do you see something in a trend that's good or bad? Is it trending to where there's more delinquencies? There's some upheaval at the property. Then obviously you're going to go to the property to see is management not holding the line there. But I'd like to see properties quarterly. That doesn't always happen. It has to be at least once a year, depending on the size of the portfolio. You have got to be there at least once a year. For communication with your staff, you should be getting no less than monthly reports. And if you're in a rent up status, if you're in a CapEx, then you need to have weekly, just touch base. It doesn't need to be a big long meeting, but you need to have weekly touch base.
Got it. So maybe to recap, Sandra, you're saying weekly syncs with the staff, monthly financials, obviously, and whenever a property is stabilized, probably visiting quarterly just to kind of check on things. And whenever if it's in lease up or big kind of CapEx projects, as frequent as needed. Does that summarize what you? Okay.
Correct.
Gary, anything to add to that?
Yeah, we'll when it's stabilized, we'll visit a property at least every 2 months. And having our properties all in one area is a lot easier because I could bang out all my properties and visit new ones. But we're wanting to drop in on a much more regular basis, usually unannounced. I could just pop in and see if it's running the way I expect it to run without them knowing that I'm coming.
Yep.
Actually, good question. So is it better to visit announced or unannounced?
Unannounced.
Completely agree. Okay, well, so Sandra, you kind of alluded to this a little bit about portfolio size. So maybe my question is, how many properties, and this is a good question because Ben and I contemplate this and I hear different answers. So curious to hear what each of you would say. I mean, how many properties should an asset manager be able to handle?
To me, it depends on if the property is stable or if it's in flux or if you're doing a lot of CapEx. But if you've got relatively stable and you're not doing heavy renovations, then at 10, 12, easy. If you've got something where you just acquired or you're doing heavy CapEx projects, then maybe bring it down or have somebody help. But there's no reason you can't handle 10, 12, 15 projects at a time.
Gary?
Yeah, I agree. But we've done something differently. What I've done is I have an asset manager / analyst. And the reason I do this, which I don't think very few people do, is because I want them throughout the whole process. They know the deal better than anyone by the time we buy it, and they can help implement that business plan. So I'd rather give him 5, 6 properties and then have another asset manager / analyst, because there's no skin in the game for that analyst that underwrites a deal. And if it fails or does great, I want that person to have skin in the game, and I could bonus them on that performance from finding me a great deal, or usually I find it because of broker relationships, but like underwriting it correctly, managing it all the way through to sale. So so for me, it'd probably be closer to 6, but yes, if I was doing it the traditional way, it would probably be 10, 12 if they're stabilized.
Yeah, there's one large company I know of that I think they have about 24 properties per asset manager. So it's interesting, right? Because they hear the different numbers, right? So Gary, yours is doing a little bit more workload outside of asset management. Sandra's talking about specific asset management, and it's ultimately the thing that I always kind of think about too is, a good regional can handle 6 to 8 properties, right? As long as they're not all deep value adds, right? You have some stabilized, you have some CapEx. So then the question is, well, the asset manager that's kind of managing the regional or alongside the regional, maybe it's a better way to put it, right? How many regionals can that person handle? So, and I don't think there's a right or wrong. I think, again, it depends on how much of a back office there is, right? What pieces are systematized outside of it, et cetera, et cetera.
It's well worth to invest. Don't spread someone thin. There's lots of money to be made in what we're doing. So don't spread someone thin. It's going to cost you much more in the long run than investing in an extra person,
Yeah, I agree. So then continuing down, I guess, so, what would you say the month-to-month duties of an asset manager are? Actually, let me write it. I'll say week to week and month to month.
So week to week, we have our weekly calls, like Senator Messon said earlier, and we have a very particular sheet that we go over that really gives us a deep dive before we even jump on the call. So we don't have to waste time during the call to go over certain things. We'll know all the different things that we need to know as far as occupancy, new rates for the rentals, turns that we have to do. Everything we need to know is on that one sheet, and it's a Google Doc, so we're not having to go pull up files from like a month ago from that meeting. Like everything is right there, and we can go back 52 weeks, 104 weeks to see where we stood at any one point, which is really nice. But monitoring that sheet, we have a to-do list and to hold everyone accountable, what needs to happen. So we go through that. As long as there's not a lot of CapEx, there's the lender requirements that we have to submit on a monthly and quarterly basis, which never used to be the case, but the loans these days are a lot more paperwork intensive. And then making sure the draws get submitted and whatnot. So asset management is a lot harder these days than it was, even a year ago.
Sandra, you want to also add to that or add to the question?
Yeah, that's exactly it. So it's your weekly numbers and your reporting to track your teams, make sure that they're on progress, that they're following up with what they need to do. It's weekly calls to any of your subs to make sure that they're following up with what they're doing and they're on track for your CapEx. It's touching base with ownership to make sure that they're comfortable with all that's going on. And then it's monthly reporting, following up with, because just as Gary said, there's reserve draws, there's bank reporting, there's Fannie Mae reporting, there's insurance reporting, there's all these lenders are very much watching, we want you to do things at these certain deadlines, these certain benchmarks, and they're following up to make sure that you get that done. So it's not just investors that you have to, that you're accountable to, it's the lenders as well. So
yeah, so the managers are managing the staff, the regionals managing the managers, the asset managers kind of managing the regional / alongside the regional, and maybe managing the construction. Who the heck is managing the investors?
well, the acquisition team.
Gary, what do you think?
Yeah, investor relations. I mean, we provide in our monthly newsletters a lot of information. So rarely is someone saying, hey, what's going on? Like, how are we performing? Because we'll say, how we're doing to, actual to budget. If something is going wrong, not everything goes perfectly. What are we doing to fix it? And so we're very communicative. When COVID happened, we were doing twice a month newsletters just to appease everyone. Everyone's very nervous in the beginning. So it's how you present your information to reduce investors reaching out. Not that we don't want to have those touch points, but if you provide plenty of good information, then people aren't going to be chasing you down,
Correct.
Excellent. So then, and I think that's the thing for people, right? They hear the asset management fee, right? It's not going for just asset management in the what's the word? In the truest sense, right? It also includes investor management, investor relations, all the things that go into an investment, right? With any of these deals, you might have 20, 30, 40, 100 investors on it, right? That's 100 K1s. That's 100 set of questions that can come up. That's 100 people to send things back and forth with, manage, et cetera. So, and I think I wanted to kind of really make sure we touch on that, because that's the other side of the business that people really don't think about, right? Everybody starts to, okay, I have to manage the asset, but you still have to manage the investors. So a good
You
thing
don't
for
make
kind of
any
people.
money on that 2% asset management fee.
No,
Most likely,
even for us, even across
yeah.
that scale, the asset management fee, I actually literally ran the numbers again the other day. I think I disrupt asset management fee. Once all the closes that we have will still be probably negative 400K on payroll and just disrupt equity, let alone the management side, right? But you make the money on the promotes, right? Which you perform and do what you need to do. So asset management really kind of keeps the lights on at best. So then, maybe continuing down, what else do people mistake with asset management, right? And I'll add two parts. That's one question. The second question is, what else do people tend to overlook, right, of what an asset manager does or doesn't do?
So I think there's a couple of basic things for asset management, because I think sometimes people overthink this too. So there's being proactive in how you manage your property. Anyone can do that. There's holding people accountable, which again, anyone can do that, and having a plan that you're executing. So I'm just trying to like make it very simple for people, to follow, because there isn't a lot of information out there. No one really teaches you how to asset manage. So it's great that you're having this panel, but if people are diligent and trust but verify, that goes such a long way in asset management. Because I've heard horror stories of people relying on their property management company not following up, and literally people have disappeared, like the staff has disappeared from that property because of the lack of oversight. And even you have your weekly calls, and even if you're performing well, don't skip calls, and have them on Zoom, because you'll find out a lot of information by having it on Zoom. Are there personal problems that you can see that's affecting them, and that's going to affect their job? It's just having that consistent call is so important.
All right, Sandra.
So what is something that people believe asset managers should do that is really not an asset management job? Is that the question?
Maybe, or something that they do that people don't realize they do. So it could be either way.
Okay, so to me, asset managers are what push the property into its highest and best performance. So ownership is always going to have the pie in the sky idea, pushing the needle. This is what we think we can do. Property management is always going to, well, we're going to do our best. I'm going to try. They're going to say all of what you want to hear, but they're always going to qualify that and scale it back, because they don't want to have to put forth that many widgets. They're going to scale it back to what's easier for them. It's the asset manager's job to bridge the gap, to see what's reasonable from the ownership side, and to see what is expected from the property management side, and to push for the highest and the best. And that's a balancing act. That's, well, owner, maybe you're a little too ambitious, or maybe you under budgeted, or property manager, no, you're slacking. You should have turned more units, and you're taking too long. And so it's this constant back and forth that is not necessarily understood. And I think also it's just an overall awareness of every aspect going on with the property. So you have to understand everything. You have to understand the occupancies and the delinquents and the capex and the performance. And is somebody just having a bad day, or is there really something trending in the property? And are these KPIs real, or did somebody just enter a whole bunch of invoices that were wrong? Or is our maintenance numbers really this, or did they not put the capex in where it needed to be? And so you're on every level checking every aspect of this property so it performs best for the ownership.
Got it.
Yeah, and I'll add one more thing. Sandra alluded to it, but it's that cash management is so important. Making sure you have enough, obviously, to pay your bills, the capex, all these different things. If you're not paying attention to that, and now all of a sudden you have to do a cash call, you are toast. Like, you've got to be ahead of it. Obviously, good operators are having tons of cash reserves, because you need to be able to pivot if you want to change your business plan. For interest rates these days, now with so much floating, you have to be well ahead of the game and manage that cash. Otherwise, you're going to be in big trouble.
Yeah, absolutely. Cash is king, and the more reserves, the better. You can always give it back to investors once the dust settles, right? And yeah, it'll lose return slightly, but safe investment is better than no investment. So, and so maybe another question, and I just totally lost my train of thought. I was going to ask, it just totally slipped my mind. Maybe I'll ask. Okay, I'll shift gears. I remember the question I was going to ask now. Two things, right? Whenever you guys visit a property, what is one of the most valuable things to do, right? That most people don't do. I'll add that little caveat, right? In terms of, how do you show up, right? Sometimes they know you're showing up, they know who you are, right? How do you really sniff out the BS, right? Because there's a lot of CYA in property management. And I mean, honestly, I like to say it's a terrible business because of really just the culture sometimes, right? And it's, for us in our management company, has been about how do we change that, right? And do something different. But how do what are the things that you show up? What should you do?
Well, I don't like giving advance notice, or if I give advance notice, I like to show up early. So if I'm going to be at a property on Wednesday, I'm going to show up Tuesday afternoon, and I'm going to, at very least, drive the property. I want to see what it looks like. I want to see how much trash is on the ground. I want to see if everybody's scurrying around trying to make it look like, oh, corporate's coming. Because I don't want it to look like corporate's coming. I want it to look like, Miss Jane.
Tenant's coming.
Coming. That's right. If this is the first time visiting the property, I'm going to secret shop. I'm going to walk in and, hi, I'm trying to get an apartment, and I want to see what systems and protocols they have in place. Are they going to get my driver's license? Are they going to offer me the best unit? Are they going to walk me through? What kind of sales pitch are they using? I'm going to secret shop. And then I'm going to show up the next day and go, hey, remember me? And just blow their little brains. But one of the first things I always ask for when I go on a property, when I do a property call, is I want to get three things. I want to get the current rent roll. I want to get a vacant unit list. I want to get a delinquent list. I will walk every vacant unit because I want to see the condition of these vacant units. And I want to know how long it's been vacant and why it's vacant. I want to get a delinquent list because I want to see, is that unit delinquent or is it vacant? You just haven't moved them off because you don't want to show a vacant unit on your rent roll. So I'm going to do a little walk and try and do a little investigation there. I want to look at a rent roll because I want to see, are you moving in people with tangible leases, or are you just moving in people for funsies? How does your delinquent list and your rent roll pair up? That goes back to the accounting side of it. Are you running delinquents? Are you shifting money around? Is this your true occupancy, or are you hiding it? And then I want to poke around and I want to see all of your maintenance little corners. I want to see this little unit that you're hiding your flooring in, that your maintenance guys actually have a recliner and an old TV and they're watching soap operas in the afternoon. Been there, seen it. Those are the things I look for. I go for vacant units, I look for rent rolls, and I look for the delinquents, and I pair up the delinquents and the rent roll to see if there's any hanky panky going on there.
I hope people are taking notes because that's definitely very valuable stuff most people don't realize. For the record, the soap operas are usually in the mornings, not the afternoons, but I don't need to tell. Gary, same question.
Yeah, well, I definitely am now gonna ask for the delinquents too, Sandra, so thank you for that. We hadn't been checking on that. We
And
definitely
actually,
did
I'll
check
add
the,
one more on that same thing, which is kind of the same. I'm not saying I was going to say, which is move-in condition reports from tenants, right? Like the last 10, just are tenants complaining about things that are kind of half ready to move in, or are they saying, hey, the floor was dirty, the wall had a dig in it, et cetera, right? It just helps you understand the quality of the asset or the quality of the move-in for that tenant.
Mhm.
But yeah, sorry, go ahead, Gary.
Yep.
yeah. Well, I also, one of the key things, obviously, you're looking to make sure the property's clean, how things are going in the office, how are they interacting with residents, answering the phones. Obviously, we're going to walk all the vacant units, all the capex, any kind of work that's getting done on the property. Are workers actually working, like Sandra said? So you want to see, if we are doing painting on the property, how many painters do we have? If it's a big property and they only have 1 or 2 guys, that's a real problem. It's going to take forever to get it done. If there's 8 guys and they've been having lunch for 2 hours, which we've seen before too, like that's a problem. So you just want to get a really good feel for the property. I definitely recommend visiting the properties at night too, because that's a whole nother story, just to get a good feel, particularly even during due diligence. Drive the property at night. Is everything well lit? What kind of tenant base is there? You learn a lot of things at night that it can be completely different than during the day.
Yeah, my favorite is showing up on a property at night and there's already cops there. Like, oh, awesome. So,
Yeah.
you guys should definitely, before you buy a property, like always go check it out. Every time we do due diligence, we always, come back. We go do due diligence, leave 5 o'clock, go grab dinner, come back 7, 8 o'clock. Yes, it's late, you're tired, but it's definitely time well spent just to really understand the asset and even understand again, how much lighting is there not. And you'll be shocked sometimes what you find. So.
Yeah. Find the longest tenant. Find the tenant who's been there the longest and go ask them questions.
That's actually a good idea. Yeah, it's something so much to do during every due diligence, right? Really spend the time to talk to those tenants.
Yep.
Awesome. Well, so for those of you that are on, definitely ask questions. I see a few came in, so I'll moderate them. So if you have questions, please ask them. And we'll probably do Q&A for another 10, 15 minutes, and then I'll break it out into breakout sessions. We'll break up the audience into smaller groups, and then I'll just leave it on for the rest of the evening. So, but maybe one more thing before I kind of go off the questions people have. What's something we haven't talked about that people should know? So I'll leave it at that. Very loose.
I only know what I know. I don't know what other people are thinking. But
Fair enough. Well, maybe what's something that most people don't realize that we didn't talk about that we should, right?
How important your property management team is. It does not matter how good of an asset, what class A, how spectacular those kitchens look, how wonderful the grounds are. If you do not have the right property management team, it will turn in a heartbeat. And when it turns, it's really hard to get it back. You've got to just constantly monitor and stay on top of it.
Yeah, these things can shift on a dime, and that's where I like to say a really good manager is worth the extra $10,000, $15,000 a year, because that person will make you that a month on the right properties. So
Exactly.
that's a good one.
I was going to say that exactly. And don't be afraid. Like if you set your expectations from the very beginning, and if they're not meeting that, then have another review. And then after that, if they're not, boom, you don't wait. Like I've made the mistake in the past of I liked someone and they just weren't performing, and I waited, and it was foolish of me. You
always pay the price. It
Yeah.
makes you a little bit bitter as a person because you want to be a good human being, but then you realize that you're the one that it comes at your cost.
Yeah, and you'll over the next month or two, you'll find all the other things that weren't getting done, or missed invoices, stuff like that. And actually, that's a big thing that people miss out on is the work that's getting done. So you should pay attention to those invoices, that monthly reports, because there are times when property managers want to make your financials look better, and so they'll just hide invoices. Believe it or not, it happens all the time.
Yep.
So don't be surprised when you did work on 10 apartments and you're not seeing the bills for them, because they will come.
Yeah.
Definitely.
Yeah.
Matter of when.
And then you may lose a vendor, you may get a bad reputation, something may happen because the bills weren't paid timely. And then you're having to rebuild that. You're having to rebuild trust and reputation because you had a manager that flaked out, or a regional that was trying to meet a goal, because property management companies, they set goals for their staff as well. So if you perform at a certain budget, if you get certain things done in certain timelines, then they're bonused. So if they're looking out for their best interest, not yours, they get a paycheck from somebody else. You're just the big expensive landlord. So if they're going to do whatever they can do to get them paid, they're not necessarily looking out for you. They're looking out for them.
Got it. All righty. So then that said, I'm gonna go ahead and moderate some of the questions. The first one, this is for you, Gary, because you mentioned it. Actually, Senator, you can also hop in too, but as an asset manager, how do you know when an expense does not go with your property?
Yeah, you only know what you know, but obviously you're doing, if you renovated 10 units that month and you outsource for, let's say, countertops, and you needed 7 countertops and you don't see that bill that month, like, it better show up the next month or ask for it. There's things just add up quickly, and if you're not, that's what a good asset manager does. They know what work is happening on that property. So that
using logic and reason, right?
Yeah.
Asking for invoice unit numbers, and well, I saw you bought 4 stoves for unit 102. Like something doesn't add up to that, right? So,
Correct.
And that's very important. Making sure every renovation, every appliance, everything matches up to a unit. So the the maintenance staff aren't running off with like microwaves and stoves and stuff like that. And it happens, and there are times where I'm like, I wonder if he's walking off with stuff, and so you've got to be very, very detailed in all of your reports, so that there's that accountability.
Correct. And also having a set plan with set fixtures. So, I'm using accessible beige or modern gray or whatever paint. I'm only using this certain flooring. I'm only using this appliance package. I'm only using these certain toilets. And so if you get a Sherwin-Williams bill and it's got China doll, no, that's not mine. Why is this in mine? No, this goes. Or why do I have these appliances when I only use the stainless? I shouldn't have anything with black. And so if you have systems and you have a unit package and everyone knows that's your package, one, it's going to streamline what you look for, and it's going to streamline what accounting looks for. And just as you said, every purchase is tied to a unit. The unit is static. Every purchase is tied to a unit. And I don't care if you're buying 10, I need 10 unit numbers, and those will be placed in those 10 units. If they need to be moved for whatever reason, then you need to tell me so that I can adjust it on my schedule. Otherwise, it'll be denied. It'll be a denied purchase. It'll be a questioned purchase. Something also to watch for is a lot of good properties will have in-house HVAC staff. That's fabulous. It's absolutely wonderful. If you have an in-house HVAC staff, watch your materials, because if you've got somebody who knows how to do AC, he knows how to do AC for all of his friends and family too. And so you may be buying all of his materials so that he could go get side work. So just make sure everything is accounted for.
okay, perfect. Let's keep going then. Gary, there's one for you specifically. Can you share the document that you do for the weekly calls?
Yeah, we can. What I can do is do like a screenshot and send it to
Or send
people.
Gary.
Email me.
Gary will give us content. Yeah, he'll give us contact information at the end, and he send him an email.
Yeah.
And then send me, I'll take 10% of the commissions there. Let's keep going. Jaspreet asks, are you saying that the asset manager should be in touch with the on-site property managers, even though they usually rely on the regional managers for updates generally?
No, I wouldn't go direct to a property manager. I go to regionals because there's a hierarchy involved.
All right. The next question, how do you keep the PM accountable, especially in cases when you are a small fish in a large pond within their portfolio? That's a tough one.
That is a tough one. You've got to stomp your feet and demand it. You're paying them the same fee. You're paying them.
Yeah. And work that relationship. This is a relationship business. So take your regional out for lunch and get to know that person. And like I said, that ownership thinking for all the staff goes such a long way. You want to make them feel their decisions matter, that what they do everything they do matters, and they'll go that extra mile, and that extra mile will put lots and lots of extra money in your pocket and your investor's pocket.
All right. Next question, what would you say are the top 3 key point indicators to measure as an asset manager? So what are the top 3 KPIs?
Well, NOI. You got to know vacant units, your rented versus vacant. You need to know how you're performing versus your budget. I don't know. There's probably about 6 that I would trail. I would track every month. And it would just be, your income, your expense, which would produce your NOI. You need to know how much you've spent in your CapEx versus how much you're drawing against your CapEx, because that could be problematic. You need to know what is your collections versus build. You need to know what is your
and cash collections, not just accrual collections.
Yes, cash every month. I had to explain this 3 times to a property manager. I don't want to know what the bank balance is. How much did you collect this month? How much did you get from tenants? Let's see. And available units. Like what's your make ready turn ratio? So that I know what's maintenance doing. Is maintenance actually getting units ready? Are we able to turn units quick enough? And are we turning them quick enough? And then are we getting a good return on our investment with higher lease trades?
All right. Let's go to the next one. I like this one. Is it okay to have a separate bonus / incentive program outside of what the third party PM company has and not tell the PM?
Ooh.
No, you can certainly have other bonuses, but you've got to work with your regional. It's a team effort. Like they are your right hand man or woman, so work with them.
Yeah.
Make sure though. Sorry, what was that?
No, go ahead.
Yeah, make sure that you're incentivizing the right thing, because let's say if your leases are down and so you're incentivizing them for leases, but other things, all the focus goes to that on them making the bonus, and it could be all these other things that they're not doing now. So NOI really kind of plays into this, the whole thing. If you're focused on NOI, then they're going to reduce expenses, look for it to maximize income, and that's a really good one. Because if you have these little things that you're going for, like work orders or whatnot, it just throws off the balance of things. So you want to make sure that they're focusing on all the right things and not focusing on one thing.
Yeah, no, there's a whole art into incentivizing the right things. And I'd say ultimately, unless you're handing them cash, like the PM company's got to know one way or the other. And, we do first and third party management, and trust me, I have no problem if an owner says, hey, I want to give an additional bonus if they do X. Why would the management company say no to that, right? You're basically providing more money to help make their job easier, right? Because if you go to the extreme, if you came and said, hey, I want to incentivize the manager $1 million for getting this thing 99% occupied, why would I ever say no to that? Yeah, that manager is going to be as motivated as can possibly be. And so I think it's a good idea. We do on our properties like to do bonuses outside of what the property management company has in place, right? It helps motivate people. It gets people kind of going in the right direction. And again, most management companies, actually, I don't even know why a management company would say no. Let's keep going. This is maybe a harder one, but I'll ask it anyways. In a partnership, typically what percentage of the GP does an asset manager receive?
Go ahead, Jason.
I don't know, 2%. I mean, it varies.
It's really hard. Yeah, I mean, it depends on a million things. Are they taking asset management fees too, or for doing the asset management? Are they not? Are they doing more than just the asset management? That's a hard one to weigh. A lot of times people try to argue the asset management fee for doing the asset management, but then there's usually other things outside of the asset management need to happen too. So you have to give up some of that. Let's keep going. Do you visit occupied units on your visit?
We typically don't. It's a disruption to the residents. Now there'll be spot checks by our property management company, but we typically won't unless we need to get into a unit or like walking a lender or something like that. But typically not.
All right.
So if it's the first time for me visiting a property, then I want to see one of every unit type just to familiarize myself with an asset. Past that, I'm not going to go into an occupied unit unless there's been a problem or I suspect that there's possible like that very high delinquency for no apparent reason, may not match up to the rent roll kind of situation. Like let's make sure that there's actually somebody living in this. But other than that, no, I'm not going to disturb an occupied tenant.
All right. What system or tool do you use for managing multifamily portfolio building or other? Do either of you use an actual system, app manager system, or just your kind of your own reports on top of the property manager?
Yeah, our property management company that we work with uses Yardi, so we'll interface with that. We've used RealPage before to connect to Yardi and to spit out KPIs. It's pretty cost effective. We've had I haven't loved the service that RealPage provides. Even when I'm trying to give them money, sometimes it's hard to get an asset loaded up to get our KPIs. So, but there's other tools out there as well.
So yeah, I use the management software that's in place and then build out just our own software.
All right. And I'm gonna ask one last question and we'll call it. I know we're already over time. Who sets the schedule for renovations? I like this one.
So it's going to be a joint collaboration between multiple parties. So like with Disrupt, it's going to be a collaboration between ownership, asset management, and the management company or on-site staff. Plus, you have to remember your lender is also going to set a schedule for renovations. They're going to come back and say, oh, well, you've got 60 units that you have to get done in 24 months, and you've got to get XYZ done within a certain amount of time. And some lenders are very specific. You've got 3, 6, 9, 12. They're very hardcore on your schedule for improvements. So you don't have a lot of leeway for that. But it's definitely a collaboration between ownership, management, any third parties that you use for improvements, and whatever lender relation you can work.
All right, perfect. Well, guys, thank you very much. Definitely appreciate it. But for those that are on, how can anybody get a hold of you guys?
You can email me at Sandra B at disruptequity.com. And I can put it in the chat if anybody needs it.
Yeah, that'd be great. And Gary?
Yeah, you can go to my website, breakofdaycapital.com, and my email is gary@breakofdaycapital.com.
Awesome. Well, thank you guys very much for taking the time. Super valuable source of information. For those that are listening to the call, it was recorded. It will be posted onto the Multifamily Masters Facebook group and channel. Really appreciate everybody taking the time. And so that said, hopefully you guys will stick around, maybe, maybe not, but I'm going to go ahead and shift this into breakout rooms. And so for breakout rooms, we'll break up the audience into groups about 7 or 8, and then I'm just going to leave it on the rest of the evening. So, feel free to run as long or short as you'd like to in your group. Like I said, like Gary said, this is a relationship business. This is how partnerships happen. So definitely network, get to know somebody, and get out of your comfort zone. It's all about, seeing who you meet and who knows you and how do you all add value and grow together. And so with that said, thank you guys very much, and let's get this loaded up.